higher than expected inflation readings from both Germany and Spain, not to mention some tough talk from policymakers at the Jackson Hole Symposium in America, markets are getting nervous about just how high interest rates could go and for how long they could then stay there. The latest decision from the European Central Bank could give us some sort of clue, and President Christine Lagarde will announce this on Thursday the 14th of September. Since its first interest rate increase of this cycle last July, the ECB has swiftly jacked up its main refinancing rate to 4.25% from 0. It has also started the process of quantitative tightening. That started at a run rate of €15 billion a month in March, and has since been increased to €28 billion a month from July out to May 2024. That faster pace should see the ECB's total asset holdings drop by around $310 billion by the end of next spring. No change is expected to QT for this meeting, but after Madame Lagarde's warning over inflation volatility and the upside risks to further price increases at Jackson Hole, economists expect the ECB to sanction another 1 quarter point increase in the main refinancing rate to 4.5%. Any comments on the future trajectory of interest rates will also be important, and that might help to set the scene for the US Federal Reserve on the 20th of September and our own Bank of England on the 21st of September. On the corporate front, we have a busy schedule of first half and full year results and trading statements ahead of us, with mid and small cap firms to the fore, although a couple of FTSE 100 members are due to make announcements or host an annual general meeting. Companies which may be worthy of further study include the following, though please note some of these dates could yet be subject to change. Vistry on Monday the 11th of September, Associated British Foods, Wix, IQE, Dowlais, Harworth and Jim Group on the 12th, Redrow, Ricardo, Fever Tree Drinks, Tullow Oil, Central Asia Metals and Pan African Resources on the 13th. Auto Trader, Trainline, MJ Gleeson, Kia and Spire Healthcare on the 14th, and Videndum will close out the week on Friday the 15th. But for all of that lengthy list, it's a FTSE 250 firm that could cause the biggest fuss in the week ahead, and that firm is Renishaw. The precision instrument specialist is due to increase its full year results at the end of June on Thursday the 14th. Although the company is headquartered in Gloucestershire, only a small percentage of Renishaw's sales go to firms based in the UK, and last year, nearly half of sales went to Asia and more than a fifth to the Americas, with the rest going to Europe, the Middle East and Africa. The FTSE 250 member also has a wide spread of client industries, ranging from automotive to aerospace, consumer electronics to healthcare, and power generation to construction. So Renishaw has a good insight into what's going on globally. It's also worth listening to whenever this company speaks, because it frankly isn't very often if you look at its short list of regulatory releases so far in 2023. In this context, it's interesting to see the shares are pretty much unchanged over the past year, and therefore languishing at the lowest mark since May 2020, when lockdowns and COVID-19 were still the main topics of conversation. The shares are down by almost half from their spring 2021 peak. Sentiment toward the shares hasn't been helped by May's trading update for the first 9 months of the year, as Chief Executive Will Lee served up a profit warning. Mr. Lee flagged 2 headline figures, and they'll be the benchmarks for this final set of figures. Now, the first was that sales were coming between 680 and 700 million pounds. That was down from a previous steer of 690 to 730 million. Analysts are now looking for 675 million pounds, and that's pretty much flat against the previous year. Should Renishaw give any guidance for fiscal 2024, analysts are looking for a 4% increase in sales to 701 million pounds. The second guidance was with regard to adjusted pre-tax profit, and Mr. Lee forecast that would reach between 135 and 150 million pounds, and that was down from prior estimates of 140 to 165. Analysts have penciled in a figure of 145 million, again down on last year. Only a modest recovery is also expected for 12 months to June 2024 if Mr. Lee gives any guidance there, when the consensus currently is 155 million. And this is just one of the reasons why Renishaw is so interesting. Since 1995, the company suffered just 10 drops in earnings, and they all came during times of a slowdown or recession around the world. Renishaw's relatively rare profit stumbles came in 1997, the Asian debt crisis, 2002, the bursting of the tech bubble in the US recession, 2007-9, the great financial crisis, 2013-16, European debt crisis and stagnating global growth, and then 2019-20 as the world slowed and COVID-19 hit. So the profit outlook for 2024, if one is given, will be particularly interesting, although at least Renishaw's well equipped to withstand any downturn. It's got a net cash balance sheet. That, and alongside free cash flow, funds the dividend, and for the year to June 2023, Renishaw is expected to declare a total payment of 74 pence a share, compared to 72.6 pence a share in the previous year. More strategically, Renishaw actually put itself up for sale in spring 2021. That's probably why the shares peaked when they did, but it called off the process that summer when no satisfactory offers were received. The shares have slumped since, though it seems unlikely management will look to revive that plan anytime soon. We shall see. I hope that you and your families are on good health and good spirits. Thank you for watching, and I look forward to seeing you next time.